Hello everyone, this is today's video analysis for November 9, 2018. Today we're looking at the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. Over the past week or so, week and a half, we've seen a change of direction for the New Zealand dollar. We've had some pretty decent news out of New Zealand in the past week, and this currency pair has made a major turn higher here over the past week or so. You can see the downtrend, the black and the red trend lines clearly moving lower for the past several months, going all the way back into March of this year, pressuring lower, and then about a week ago breaking through the black and the red trend line on the way higher. Not only that, a couple of days ago we broke through the 100 period simple moving average here on the daily time frame and have continued that upside pressure. So the question is, will we see the uptrend continue, or will we see it reverse and go back down again? We don't know that. We can't know that. But what we can do is trade the direction the market's going in, which currently is more bullish than bearish. Let's go ahead and zoom it in a little bit. Maybe not that much. Let's go in like this. We look back to the left. Let's look at that pink shaded area here, right smack in the middle of the chart. You can see over here where the black circle is, support into that pink shaded area. That's important for us for today. And of course, not too far to the right of that, right here, you see resistance. So what we're highlighting here at 0.6710, 67.35 is historical price action around this pink shaded area. Historically, we see support and resistance around this zone. So we know that this is an area where the market will often make trading decisions to buy, sell, enter, and exit. Since we're above it, we're looking for that to become support. It's seen support here before, hasn't it? Look all the way to the far left. So since we're above the pink zone, since we're above this decision zone in the market, we look for support above 67.10, 67.35. The risk is easy. We just don't want it to get back underneath that pink zone, because we know if it does, likely going to go lower. So if we're looking for an opportunity in the direction of our current momentum and sentiment for this currency pair, we're often looking for buys on dips into support to give us better opportunity for risk versus reward. Of course, the target resistance is the blue zone. We've already seen some resistance there, and if it continues the direction of the rising trend, the next targets would be the next zones higher, at least at this point. 68.30, 50 is the green zone, and that is where the next resistance is. And again, the risk is it breaks the pink zone and goes back down to the yellow zone, which is right there close to where the 100 period moving average is, and 66, 65, 80 yellow shaded area. So at least at this point, not a really great place to sell it on top of support, the pink shaded area. Probably the only real good reason to sell is that it was back in the pink blue zone or under the pink zone. So today we'll be looking for opportunities, trade setups, price action around the pink zone for a potential buy opportunity. Take it down to the 4-hour time frame. We can see that it's already come down earlier today, found some support there at 67.35 and bounced up a little bit. We're at 67.49.50 right now. So it's bounced up a little bit already, about 10 to 15 pips off of that pink zone. We want more of that. So let's watch for the market to maybe dip its toes back into the 67.35 or the upper 67s. Look for a buy scenario targeting back to the blue shaded area as our first target, and of course higher levels for our next targets. If you want to use kind of a two-stage entry strategy, you could enter it here and at the pink zone, but all in all, your risk is underneath. Your stop loss is going underneath 67.10. That way, if it breaks lower, you are none the worse for wear. Again, it's pretty much been the pattern of this rising trend. You've seen down here where the market, let me turn this into a circle. You've seen down here where the market dipped into the blue zone and started moving higher. You've seen it right smack in the middle where the market dipped towards the orange zone and then turned higher. So we're working with the pattern of this current trend, which is a dip into support and the continuation higher for the New Zealand dollar. So a buy into the pink zone becomes an opportunity, targets the blue zone, or a new high back into the green zone. The risk is the break under the pink zone for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.